in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving Iron.
Hello and welcome to Moving Iron Podcast Markets. This edition of the Moving Iron Podcast is brought to you by Dawson Tire & Wheel, your premier ag tire and wheel provider in North America. TractorZoom, delivering insights, and Dryshod Boots, the official work boot of the Moving Iron Podcast. Today my guest is Chip Nellinger, and Chip is with Blue Reef Agri-Marketing in Morton, Illinois. And Chip, how you doing this morning?
Hey, doing well, Casey. I'm ready for the 4th of July weekend. It's been a crazy couple of weeks in these markets and a little bit of a head scratcher.
Yeah, it has been. It's been a little nuts. Yesterday, last couple of weeks, we kind of lost everything that we'd gained and got back down into the teens again. I think 315 is where maybe 312 is kind of where we settled up there for a minute, and then it shot back up this morning. We're opened back up here with the overnights right around 330, so we've gained most of that back. And we're at that point again where either we're going to break through that 333, 335 level and see some things take off, or we're going to go back the other way. And I guess we have a couple reports out today too. You got the crop progress report, and there's another one too, and I slipped my mind which one it is. What's the other one? Acreage report that comes out today as well. So I guess as you take a look at what's going on right now in the markets, and then you got these two reports on top of that, what's your thought right now?
Well, historically, coming into the long holiday weekend here, the 4th of July, things can get a little more volatile in the grain markets. Obviously, weather is a big part of this, and so it has definitely increased the volatility. There's been days and even weeks past where corn, put in a 2.5 cent daily range, and maybe a 6 to 8 cent weekly range, just dead, nothing going on. Well, now we're seeing a lot more volatility. They just hammered this corn market last week. It was raining everywhere, supposedly. So Friday they just crushed everything, led by wheat. Corn followed. They hit beans 20-25 cents off the highs. And then you walk in Monday and everyone realizes, hey, these funds have a near record short position of probably north of 300,000 contracts of corn. And, oh, by the way, not everywhere got the rain. There were some really good rains around, but not everywhere, probably just a touch less than expected. Guess what? Let's look at the 2-week forecast. We got a lot of 90-plus degree temperatures out there. And also we've got, like you mentioned, these two reports coming out. We've got the quarterly stocks report, which is always volatile. We've got the acreage report, and as well as the end of the month today and end of a quarter. And the funds decided, hey, let's get out of some of our corn shorts, book some profits, and we've seen this spike higher. We were at 1.78 cents higher yesterday.
Yeah. Here
in the overnight, Tuesday morning ahead of these reports, we've been about a nickel higher. And the funds are blowing out of some shorts, and you're starting to see that reflected in price action. And now the weather does matter. So no markets Friday. We've got a long weekend. That always makes people a little bit nervous this time of year because a lot of times you can have big 180-degree shifts in the forecast. So we're coming into a time frame here going into the end of this week, first part of next week, with a new month and a new quarter coming, to see, hey, what's the weather going to do? Are we going to go into this hot, dry pattern and start stressing things? Or are we going to see some, consistent rainfall, even though it's going to be on the hot side? And then the funds, a lot of times, kind of the last 3 or 4 trading sessions of a month or quarter and the first 3 to 5 trading sessions of a new month and quarter, oftentimes, use that time frame to make some big moves. And so are they going to be on the buy side in corn starting the month of July out, particularly as you get into next week? It's going to be really interesting. So throw all it in the pot here. In a couple hours, we're going to have some more to throw in there, Casey, with these reports coming out at 11 a.m. Central. So it's going to get really, really interesting going into the weekend here.
Yep. Okay, so let's jump over and talk about this quarterly stock report. What the USDA is expecting to trim corn planted by about 1.8 million bushels from the March intention to 95.27 million acres. But they're looking like there's more soybeans that got planted, about 1.2 million more from what they saw in March, up to 84.7 million acres. So as that starts hitting the wire, I mean, what's your thoughts on that? How much do you think that's going to have an effect on the overall corn market? Because people are still, I mean, here's another article down here talking about, guys are sticking to their guns at this 179.5 bushel per acre average, because there's not a quote unquote enough dryness yet to get anything started. The thing about the weather patterns and this acreage thing that we see happening here, we get the rains just in time. Right, it's if this last batch of rain that we got was a week or two, anywhere a week to 5 days, a week to 10 days later than what we got it with, there would have been a serious issue with the crop. But now we've got that rain, we're kind of back in a decent position again. So I guess we're just kind of hanging by a thread here over and over again. So I guess as you look at weather patterns that you've seen happening, and then this acreage report coming out, which do you expect to see some moves today? I guess is what I'm getting at.
Yeah, I think it's entirely possible. I honestly think the stocks probably matter more than the acreage. I think the market expects and has digested, 1.5 million or more fewer corn acres and about the same increase in bean acres. I think that's kind of expected. But what's really hard to peg is the quarterly stocks numbers. Obviously there's an average estimate out there. And if it's wildly one way or the other from those estimates, that could definitely have an effect on prices today. I think, though, it's more about what are these funds going to do? And, they dictate in the short run. If they just decided, hey, we've been short corn for the better part of 12 months now, we've made a lot of money, and we've got the uncertainty of yields coming out here and the rest of the growing season, it's time to be out of corn. You could have a rally even with some bearish weather. Now, it might be very short-lived. So to answer your question, yeah, I think you throw all that into the mix here, and it's just going to be a really interesting end to the week. Ahead of a long weekend that always makes people stressed out because of that potential for a big shift in the forecast one way or the other from Thursday afternoon. And by the way, there's an early close Thursday in our markets. I believe 12:05 Central is when the grains close Thursday. No markets Friday, and then not again until Sunday night. So that's a long time to be sitting there with no markets in mid-July when the weather really matters. So when it boils down to it, I think Sunday night and Monday are going to be really interesting based on what the new forecasts say and what the attitude and the direction the funds are going to take. Is this a 2-day wonder and now they're going to go right back and put these shorts back on first of next week? Or is this the trend and they're going to liquidate the bulk of their position, which could run us higher? So you're going to see a lot choppier trade, I believe, than what we've seen for at least the last 6 or 8 weeks in here.
Yep. All right. So the other thing I've been watching here too is what's going on in China. And I read a thing on Twitter last night, so it's obviously true, that I can't remember who it was. I think it was BBC had it. They were talking about a new pandemic that could be in China that could be coming from pigs that could mutate to infect humans as well. So it's the gift that keeps on giving there, I guess. As you take a look at what's going on with the coronavirus and what we see happening with China, China just stopped getting beef from Brazil or meat from Brazil based on their concerns about the coronavirus and what they see there as well. So it's going to have to start buying beef some other place and pork from other places. They've been buying pork from the U.S. for quite a while here, but man, I guess as you take a look at this, it really feels like there's that opportunity for the U.S. beef producer to really kind of start, and pork producer to start shoveling some more into China there.
Yeah, this China thing is really a difficult situation, to be honest with you. on the one hand, we've got this trade agreement that is supposedly on. On the other hand, though, what is when the rubber meets the road is, are they actually taking our products? And they have been, but it's just been barely enough, kind of token amounts, if you will.
Yeah.
And like you mentioned, the opportunity is there to really expand beef and pork trade. But on that side of the equation, they've slowed down a little bit here recently. So that's something that's really going to be watched closely going forward, is the pace of the exports. And it just seems like you wake up every morning and there's more and more escalation and talk back and forth on what is going on with China and the United States on many fronts. Hong Kong trade, the handling of this virus issue, all kinds of problems we have out there and disagreements. And to me, I don't want to be too pessimistic. It feels like they're doing just enough to get through the election to see who's going to win this election.
Yeah. Yep.
And, who if it's Biden, they're going to be right back just, eating our lunch and lying, cheating, stealing like they always have been. And if it's Trump, I think he's going to give them about 48 hours and says, let's ramp this up. You prove it to me. Otherwise, we're just going to put tariffs on everything again, and they're going to last until I'm not in here anymore, or you shape up. So, right. The markets eventually, though, the problem is, like on beans, for example, they've been a pretty good buyer here the last few weeks. They've been a little quiet for the last week or so, but they're nowhere near the pace they need to be to hit the numbers that are, part of this phase one trade deal. So you can only do that for so long. This is a time frame where we need to be really seeing some massive bean exports. And we're now almost into July. If this limps along till August, eventually they're going to have to start decreasing the export demand pace on beans. And all that does is just go right to the bottom line and increase your ending stocks. And if the rains continue and we have a big bean crop, all of a sudden that's not a good combination. So right. I'm a little concerned with the pace of things, as far as what their the do to say ratio. That's the old saying. You can say all you want, but what are you doing?
Right. This kind of reminds me of what I used to do when I was in junior high, where I was always in between girlfriends on major holidays. So I didn't have to bring the flowers on Valentine's Day or get the gift on Christmas. You know what I mean? I did just enough to do up to then. And this is exactly what that feels like. I mean, anytime that they can go get something cheap out of Brazil, China turns around and goes and does that. And they're going to continue to get stuff cheap out of Brazil because the real continues to have its difficulties and devaluations and everything else that comes up with that. Same thing in Argentina. So, I mean, there's always going to be that, as long as the U.S. dollar stays as strong as it is, we're going to have a hard time competing with other countries when it comes to exports. And I'm not saying I want the dollar to go down in value or anything like that, but it's just there's nothing in there that says you have to come buy it from us or else. You know what I mean? And the where else is we're just going to go back to beating each other over the head with tariffs, and that doesn't help anybody. So I don't really feel like there's a lot of substance here that other than I promise to do this, and that's really about what it comes down to.
Yeah, exactly, and that's right. And part of the problem here is that although we've had a little bit of a correction in our favor with the Brazilian currency, it still makes them very competitive in the world and cheaper than us, and they're starting to harvest what appears to be an okay second corn crop down there. They supposedly still have some beans, for export, and that's why our window is small. By the time we get to, basically right after harvest, say about December, January, our window starts closing and it opens up down there again. And their currency isn't going to make them plant any fewer acres down there. They're going to plant every acre they can because they're making a lot of money down there.
Yep. Yep, that's the only real currency they have right now of value. It's the crop they pull out of that field. So yeah, it's going to continue to do the exact same thing they've been doing. I did find that article, the G4. Keep an eye on the G4 in hogs, and it is a strain of H1N1 that affects Chinese pigs that has become more infectious to humans and should be mentioned because it has all the hallmarks of a candidate of a pandemic virus. So that's awesome. I'm glad that we can keep getting these gifts from China that keep on giving. Holy crap, man! I guess when you take a look at what's going on in the hog market, and then you throw this kind of on top of it with in the Chinese pig market, and then you throw on African swine fever on top of that, it kind of feels like to me they need to start over and just get a whole new herd in China.
Well, it sounds like they're trying. They can't keep them alive is the problem, but I think they're trying to do that. And they obviously have problems over there.
Yeah.
And I saw that story yesterday as well. It's hard to know what's what out over there, I guess, and what's real. And I think that's one of the most frustrating things to me is this situation. No matter what side of the aisle you're on, everything's political now, and you don't know what to believe anymore. And stories get put out for a reason and a purpose more times than not, and to support a movement or one side or the other, and it's hard to know what to believe anymore.
Yeah, it is. It is, isn't it? I mean, isn't that just I've got to watch 3 different news channels and read 2 different newspapers to really kind of get the truth of what's actually going on. No one's lying to you. They just leave out the pertinent details that would make you see the whole picture, I guess.
Yeah. No doubt.
Yeah.
No doubt. And you just, you just don't know anymore. Even, that might have been there for a long time, and you never know. It's very frustrating.
Yep.
It's very frustrating. I just like to fast forward to November, get this election out of the way, and get this year out of the way, and hopefully we can get to something that's more normal than what 2020 has been so far.
Yep. All right, let's jump over and talk about ethanol real quick, and we'll close this thing down. Ethanol has been on the rise since they've reopened the country back up, and now we've got kind of a battle brewing in the corn states with the EPA and the RFS gap waivers and those kind of things. I guess as you take a look at what's going on with ethanol and how that is going to really affect the overall stocks in corn right now, because all the stocks we had laying around were left over because we weren't producing ethanol for about 60 days. So I guess as you take a look at the overall ethanol and how that reflects to the corn stocks, what's your feeling there, and kind of what's the vibe that you're getting from the market about that?
Yeah, I think there's some enthusiasm that some of these plants have come back online a lot quicker than anyone expected. There's plants out there that are, have opened. They're kind of competitive with their bids. As the market, the country kind of rushed back and reopened, I think there's some enthusiasm for people getting out of their house. They've been locked up for 3 months, hitting the road. They don't want to fly anywhere, but they'll drive to a lot of places and take the family somewhere and get away from home for a little while. And so I think gasoline usage has really rebounded. That's drug ethanol usage up a lot faster than I think a lot of people expected. We're still not back to normal, but we're definitely headed that way. And I think that's a good sign because I think it's a lot quicker than anyone expected. So that's maybe one bright spot that maybe we won't take as big a hit on the ethanol demand side as maybe what it looked like 2.5 months ago when everything was shut down. Obviously now we're fighting some potential kind of closures again in California and maybe parts of Texas, and so there's always 2 sides to every story, I guess. But so far, the trend for the last few weeks on ethanol demand and usage has been pretty sharply upwards and expanding every week. And so we'll get that report out tomorrow. That's closely watched every Wednesday when those reports come out. But that's so far a good development in my mind. And our exports have been pretty decent. And then after today's report, the quarterly stocks number, that's where you get a little better feel for, where can we start zeroing in the feed demand side. That's always the biggest unknown. And that's why these quarterly stocks are so important, these quarterly stocks reports, is it gives you you can kind of back into what the last quarter's feed demand was. And so that's we'll get a little better piece of that puzzle here in about 2.5 hours, I guess. And but the ethanol side definitely has come back nicely and still well under our normal pace.
Right.
But boy, it's a lot better than it used to be.
No, that's for sure. It's better than zero. That's for damn sure. So, all right, man. Well, good stuff, Chip. If folks want to reach out to you, pick your brain about what's going on, or maybe just work on a plan that they're looking at right now, because as you say, things are changing day to day here. What's the best way to do that?
Yeah, best way is just give us a call at the office. It's 309-550-7213.
Right on, man. Well, I'm Casey Seymour with Moving Iron Podcast. Make sure you check me on Facebook, Twitter, and Instagram. That's where you're going to find all the latest podcasts when they come out. Also, all the blogs that I post. Make sure you check out movingironllc.com for all the latest information about the Moving Iron Summit, September 1 through 3 in Nashville, Tennessee, at the Renaissance Hotel right downtown there on Lower Broadway. Also, check out the Global Ag Network and the great podcasters there talking about everything there is to do with ag. So until next time, I am Casey Seymour, Chip Nellinger. Let's go move some iron, folks. Out.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.